Well, good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this is for Wednesday, and we're at the 21st of December, 2022, and we're all getting ready to freeze. I mean, this is going to be one of the coldest spells that the United States has had in a very long time. It goes through the whole country. They call it a polar vortex, I guess is what they're calling it. And it's when all these things come together to just create massive cold. Give you an example. We were 30 degrees in Chicago. Today we'll drop. Tomorrow we'll be in the teens. Friday we'll be below zero without wind chill. We'll have 50-mile-an-hour gusts. We'll go down to 35 below zero. And the Chicago Bears are going to play on Saturday in weather that you can't believe how cold it's going to be. I guess it's going to be a running game is the way to look at it. As for everything else, travel, people wondering what's going on, their attention turning away from the market, it's normal. This is when you're getting ready for the holidays. A lot of people aren't working right now. I went out today, had to do a few errands in the afternoon. A lot of people out and about. You know, obviously they should be working if it were a normal work week, and they're not. So you can see it. The grocery stores especially were very crowded, but it could be because we're going to be so cold and people are smart and that they're stocking up for everything. I know I did. So where does this put everything? Well, it means that we're going to get a slew of economic data in the morning that we normally get, like unemployment claims come out. You'll look at it, it's got its 15 minutes of importance and it'll die off, and then the market just goes about doing whatever it does. You'll hear on financial TV the volume is getting lighter every day, much lighter. It'll become a ghost town on Friday, okay? I have missed last night putting out these updates, and I missed my morning one. I have things to do for the holidays as well. This is a free service I put out, so please put up with me when I miss it, all right? Did I miss my subscriber, my paid service? Absolutely not. People pay me. I do my job for that, okay? Will I come out a little late occasionally? Sure. Okay, but let's face it, it's that time of the year. I don't think they miss it. When I go away on vacation, I typically put out updates. I don't know other services that do that. Okay, now, talking of services, you know, I just released on Monday, the word is Monday, I released my Outside Day course. So just to remind you, it's on sale now through Christmas, and after that, the sale is completely over. Normally now my courses, the Bollinger Band in this course, $120. I told you they were going up in price. I'm lowering it back to the original price of $90 until Sunday. And after that, and that's Central Time, it's off. And it's going right to the 120, and that's it. You see this pattern all the time. Learn to use it. It's so important. And often this pattern comes in at a top or a bottom, and you got to know how to play with it, what it means. In addition, I tie it together with our free charting software for the course. This is normally $60 a month to $90 a month. I give it to you for free. I give you actually the $90 version for free, the $100 version when the new year begins. You're going to get that. You're going to get 2 weeks to my complete research. The combination of that is more than you're paying for the course. And you can begin anytime you want. So you can buy it now. Let us know when you want to start it. It might be next year, the beginning of the year. Not a problem. We know that you bought it. We'll honor it when you do it. You might want to give it as a gift, and that person doesn't begin it until whenever. That's fine, too. We'll work with you on all that. How do you get it? Go to iraepstein.com under the word education, or you can move your cursor up here and you can get it. Okay, enough of that, but I wanted to get that said because it is important, and you're not going to be able to keep getting it. You're going to spend more money by 25%, which I appreciate. I prefer you don't buy it now and buy it later. It's more for me. All right, so let's take a look and see just what we've got in the markets and go with it from there. In Oxy, by the way, this time I've decided to leave this up here. I don't know if you've ever seen this. These are some of the tools that we can use on the charting software. I'm bringing this up to you because we've got the Outside Day course. But it's all these different things. It's easy to change all your contract months at one time if you're in futures. If you're doing these, you can work with different parts. There's calendar days in here to help you. It tells you about if you want to know the values of different things. It's all through here in history. You can switch these charts just by clicking on the chart to monthly, daily, 5 minutes, 15. You can make up your own variable times and the like. Colors, anything you want. So I designed it so I have a pretty good idea how it works. I did this 30 some odd years ago, and they've upgraded it, obviously, the company I worked with, but boy, I still have my handprint all over it. Every time a new release comes out, I'm the guy that gives the comments. Okay, so the market coming down, getting its bounce, but you now have ended a downtrend. You could see you had consistent lower highs, lower lows, and that pattern has now changed. That big break is run its course. It would take a move under these most recent lows to say, Ira's not right on that. But that doesn't mean you'd be back in a downtrend. Obviously, price would be a new low. But the pattern here, it doesn't call for that. What it's calling for is first, the battleground at the 200-day average. If you can clear that, then these other averages. No, I am not saying this market's necessarily going back up here. What I am saying is I think a trade bottom has made its way into the market of importance. The market started making the bottom at the combination of the gray line right here, the 200-day average with the Bollinger Band, slipped under it, and it's still under it. So it's got a week under it. When that happens, I look for then the resistance to be rather formidable at the 200-day to the 18. To the red line, the 18. In momentum, I will know if I'm right probably tomorrow. If you lose the red line closing over 21, it finished at 1993, the odds are super strong. It's going to make a run into those moving averages. So that would give me an idea that I am dead right on what I'm looking at. I wish I could say the same is true of the lithium and battery tech, but you're just beginning to embed. So a good rally is a selling opportunity in the market. There's nothing here that says this market is bottoming, present tense. Apple, too many days under the Bollinger Band, so you get a bounce. It certainly hurt itself. Every tech report I get, and folks, I get so many of them, it's crazy. By design, I mean, I really subscribe to a lot of services, not free, by the way. I pay for them. I don't want them to sway me one way or the other. And everybody's saying, this is the stock you got to own for the next year, 2 years, everybody, and this is your buying opportunity. Okay, I'd rather buy it higher when it's in an uptrend than pick a bottom. But remember, they're investing, I'm a trader. Huge difference in the approach between the two. As a trader, I'm looking at a market that is oversold, can bounce. I see resistance at 141, but that is $6 away from where you're at. In Disney, I think this is make it or break it time for Disney without them doing something very important. Avatar either gets legs through the Christmas holiday or there's a problem. I started laughing today when I was seeing that AMC was interested in buying Cinemark, select parts of it. Why? I think AMC can go bankrupt. They're going to take on something that doesn't work. I don't understand the logic. They think that owning more of things that don't make money will get you out of trouble. Didn't Cinemark declare bankruptcy? Companies that make money don't declare bankruptcy. AMC, the only reason they're alive is they floated to people that are nuts when they got to $32. More shares, do you remember that? And then they floated bonds. I am not declaring they're going bankrupt. I'm saying their business model stinks and it needs a change. Do we understand it? America needs theaters. They need the Regals. They need the AMCs. We just don't need as many of them. First thing, and we need them to operate differently somehow, whatever that means. Why? Because I owned a movie theater, so I'm not a guy on the street looking at it. And I failed with it. I got rid of it. Higher high, lower low. By the way, it's still open with somebody else, but I'm sure it doesn't make money. Higher high, lower low, giving you a bounce in the market. XLI, higher high, lower low, as you can see. Not going anywhere there either. There's a lot of nothing to do in these markets. Same thing in XSD. But I can argue that the semiconductor people, hey, you came down, you're holding or trying to hold in the key moving averages in the Bollinger Band, and you're oversold. Plus, what else? I hear him. I think Santa left the North Pole. So until stock indices get underneath Tuesday's lows, be careful. Now, home builders. I don't understand why people are friendly home builders here, other than, there's a big other than. Interest rates have fallen back a little bit, not a lot, but let's call it off the peak, maybe half a point, and there's a big shortage of homes. How you get enough homes into the market, I don't know. Where people will get enough money to put down at still the relatively high price and be able to qualify for a 6.5% mortgage, I don't know. I'm not saying it can't be done, but people get creative, and home builders have a history of doing that. In XLE, I think it's now time to be looking that you've gone up to the resistance. Is the market going to have more legs? The fact that it's oversold tells me it could. Could this market get up and challenge wherever that Bollinger Band comes in? Yep, it's not bearish anymore. This whole break ended with this current rally. In GLD, you got up to a spot where I don't want to own it. Okay, that doesn't mean I'm bearish. You're overbought, you've hit the Bollinger Band again. Each time you've come to it recently, you have failed from that area. Why should this time be different? I'm not saying it can't be, but why should it be? Then I look at silver. Well, I told my silver traders in futures, because that's where we got long, we weren't able to, there was no pattern here that made sense. But they got out of the market last night, not tonight. Last night I had put out to my written subscribers, market orders, just get out. And it worked out nicely. And neat little trade. Enjoy your Christmas. I want you to. That worked out. It was it paid for some gifts, right? Higher high, lower low. And by the way, I get losers too. I lost in corn this much and I made that much in silver. So I'm happy. TLT, higher high, lower low. Market came down, oversold. I don't think there's anything there. Dollar's still bearish, and it's getting more bearish. And you're going to say, what's he talking about? Look where it's at. Well, you just got the 18-day average under the 200. Just happened. That's another bearish setup in this market. So I am not in the camp where people keep saying, and I keep reading it, the dollar's going to be bullish. I don't think you've got it. You will get corrections. It won't last in the bullishness is what the long-term charts say. Does that look like a bull chart to you? If so, sell your course to the public because I don't think you'll sell any. That's not a bull chart, all right? FXC is bullish. And we're in a correction phase. You've lost your embedded reading. I want to see the market get to the 18-day average, which would mean the dollar bounces, this comes down. Why? Because the dollar index is comprised of 40% of its weighting is the eurocurrency. So whatever this does, you trade one or the other, not both together. Does that make sense? You don't go short the dollar and long the euro. You're either long the euro or short the dollar, which chart looks better. But otherwise, you're doubling up. It doesn't make sense. You put it all together. You try to come up with a game plan. I'm going to try to be here for you first thing in the morning, and I want to remind you again to get the outside day course. And I love the course. It's a good one. All you need to do is move your cursor up here, click on the icon, and away you go. I'm Ira Epstein. Thanks for watching. I'll see you tomorrow.